Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Massar and Matt Miller. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and of course our partnership with YouTube. Carol, stock's not far off the session highs, but we should point out this is really a mixed bag of trading. Really, most of the gains concentrated in some of those big cap tech stocks.
Yeah, NASDAQ overall up about 1%. I'm thinking about Google probably helping out because it's topping the NASDAQ 100 and the S&P 500, laying out some products, some services, talking AI. That stock, Matt, is up 4%.
Yeah, so Google's a gainer right now. I'm looking at Airbnb. Those shares are down. We actually talked to the CEO, Brian Chesky, at about 1:30. The shares got hit hard by a weak outlook, and actually a lot of the analyst notes that I've read have said Booking is a real competitive threat. Now, Chesky said he doesn't see Booking taking market share from them, but it was mentioned by at least Morgan Stanley and Piper, so it's a concern for the street.
Yeah, it's interesting because clearly consumers are willing to spend on things like travel, but they're probably going to be more careful and more picky about where they spend. So they're definitely fine-tuning how they're deploying that cash.
Yeah, that's right. Of course, we talk about sort of the earnings picture overall that we've had up until this point here. The idea that not only are there, the beat rate was, I guess, more than what people expected, but really the guidance, the beat on guidance. And I think there's some interesting data that the folks at Bloomberg Intelligence have put together here about the beat on that guidance, something that isn't always closely tracked. It'll be interesting to see what we hear from Disney in just a few minutes here. The countdown to the close continues here with the closing bells. The Dow Jones Industrial Average looks like it's going to finish the day relatively unchanged. It's down about 33 points. That's going to be about a 1/10 of a percentage point drop on the day. The S&P 500 higher by about 18 points or 0.5%. The NASDAQ Composite higher by more than 100 points or 1% on the day. And the Russell 2000 holding on to its gains for the day, going to close higher by roughly about 5 to 6/10 of a percent.
All right, Romaine, we know Scarlett's going to dig into the major industry groups in the S&P, but, Scarlett, you mentioned this earlier, the financials, the banking, whether it's regionals, are down about 1% today. And if you look at the KBW, it's down about 1.25%. So we're seeing selling within those groups.
Yeah, resuming the weakness that we've seen for the last week. And certainly that's reflected here. Banks along the bottom here down 0.75% as a group, also losing ground. Energy stocks lower by 1.2% as oil prices decline. On the flip side, you guys mentioned Alphabet. That is lifting the media and entertainment complex along with Netflix. Software and services also doing better, 1.6% advance there, and retailers as well. But really, it's the tech complex that steals the show here.
All right, as we await Disney earnings, folks, let's go to some of the individual gainers. Rivian, we talked about it after the close yesterday, at its highs, up 13% today, finishing, though, with about a 2% gain. It was among some of the top gainers in the NASDAQ 100 earlier in the session. Reported a narrower than expected loss to start the year, reaffirmed its annual production plans as efforts to really cut costs seem to be taking root at that company. So that was an outperformer. Akamai Technologies up another 8.5%. It was number one in the S&P 500. Reported first quarter results that beat, gave a full year forecast ahead of the analyst consensus. But some analysts are kind of expressing some caution about the long-term prospects for this company. So biggest jump, I think, in about since 2020. And then I do want to mention Zscaler, man, up another 6%, top among the NASDAQ 100. It's up about 35% in the past 6 trading days. That's since it reported earnings and said it sees above guidance for the third quarter. So this one, Matt, has been on a tear.
All right, I mentioned Airbnb already, but that stock closing down. It was down 14% last time I looked. Airbnb, this is the after hours trade, right? So, of course, you're not going to see what happened during the session. In fact, it looks like those are all the after hours trade, so they're going to be unchanged if they're not trading shares. But during the session, Airbnb got hit hard. Also, Romaine, you were talking about Icon Enterprises. Those shares got hit really hard. I walked down to Fresh & Co. around 2 o'clock, and I'm pretty sure I saw Carl Icahn just hanging out on the street.
What?
He was wearing a baseball cap.
Windbreaker?
He was talking to one of the garbage
he
guys.
always wears this little windbreaker.
Yeah,
Did he have
he
that
was
on?
wearing like a maroon sweatshirt.
Okay.
I'm not sure if it was Carl Icahn, but it looks like Carl Icahn. In any case, they had first quarter revenue down 35% year over year, and they've been called in by the U.S. Attorney's Office for the Southern District of New York looking for information. Of course, they had that short report from Hindenburg. So very difficult times, I guess, if you're an Icon shareholder, even though you're going to get the dividend. Also, H&R Block, after earnings, dropping not to a 52-week low, though. I want to point that out. H&R Block is not
because I said it got near it, and the
low.
CEO reminded me it wasn't quite at a 52-year.
You can see
52-week low.
Yeah, and then Dutch Brothers, which I thought it was like a maker of blunt wrappers, but it's actually a coffee shop. So Dutch Brothers down the most since February. Quarterly results disappointed in same-store sales, and I guess people are using either the local coffee shop or Starbucks, or maybe they also were disappointed when they went in there and found no blunt wrappers.
Let's take a look at what's going on in the yield space here, because this really was the big driver of what we saw in the equity market. Remember, there was a sharp drop down in yields right around that 8:30 mark here when the CPI report came out here. A big readjustment here. We're talking about 12 basis points down on a 2-year yield, back down to about 3.9, and even on the longer end of the curve, right around that 10-year and the 20-year, we saw a drop of about 6 to 8 basis points. More importantly, I think it's interesting, the repricing that we saw in the swaps market. Remember, just a week ago, basically heading into that Fed meeting, you had about maybe 35 to 40 basis points of rate cuts were being priced into the market. As of right now, you have more than 75 basis points of rate cuts being priced in this market for 2023 alone, despite the fact the Fed has made it clear, at least up to today, that it has no plans to do it. And that really brings us, I think, to the broader issue here. Everyone has been tracking so closely, guys, what the Fed is doing or what they might do here. And I guess the question now becomes, has the market taken its eye off the ball?
I mean, pricing in 75 basis points of cuts seems a little unrealistic at this point. I find it hard to believe, but it is interesting to see kind of this disconnect between maybe what the Fed is saying, and we'll see what more Fed officials have to say, and versus what the market is showing.
Didn't John Williams, the president of New York Fed, just say yesterday that he doesn't see any scenario in which there would be a rate cut? I mean, he made it really clear. You can't be more. We have Disney earnings
are crossing the wire right now. Here are your 2Q numbers coming in. Revenue at $21.82 billion. That's pretty much on the nose of what the street was looking for. Their fiscal 2Q adjusted EPS coming in at 93 cents a share. The street was looking for 94 cents a share, so a modest miss on that front here. Disney Plus subscribers in the current fiscal quarter, in the past fiscal quarter, 157.8 million. That's a miss. The street was looking for 163. For their streaming losses, remember, we talked about the losses in that streaming business. They did narrow in the most recent quarter, a $659 million loss for the streaming business. The street was looking for a loss of about $850 million. Let's go through just a couple of their other divisions real quickly here, guys. Parks and Experiences saw operating income of about $2.17 billion. That's relatively in line with what the street was looking for. The Media and Entertainment Distribution operating income coming in at about $1.12 billion. And we should point out the revenue, guys, for both of those units relatively in line with street estimates.
And the big question, I think, during the conference call, one of them will be whether Bob Iger, the new or old CEO, depending on how you look at it, is going to reinstate the dividend as well. Both. There you go. Of course, they suspended their payout in 2020 to preserve cash during COVID, and everyone was looking to 2023 as a potential timeline to return resuming these semi-annual payouts. So that's going to be a big question, because once you resume payouts, then you open your investor base to a wider set of people.
Yeah, that subscriber miss, though, still is a little disappointing. And I'm just looking at the press release. Bob Iger is talking about from movies to TV to sports news and our theme parks, we continue to deliver for consumers while establishing a more efficient, coordinated, and streamlined approach to our operations. So we know they've been cutting costs, right? They gutted the team that built Disney Plus. So we know that they've been making changes, but it sounds like they're still working on it.
Let's focus on the traditional TV business real quickly here, because I think this is interesting. A 35% drop that we saw in profits at the traditional TV business. So this is basically the broadcast business, more or less here. A 35% drop down to $1.83 billion. And remember, a lot of folks had looked at the results that we got out of Warner Brothers Discovery as well as Paramount, and they sort of saw this coming, a drop in ad spending. Disney is attributing that 35% drop to the result of higher sports programming costs and lower advertising.
All right, so we're looking at the shares dropping here a little bit in the aftermarket, 1.5%, not a huge drop, although obviously it's a very big company. Disney's a $185 billion company, so that does take some wealth out of the market, but I don't think it's quite that bad. It doesn't look as bad as it could have been, I guess.
You know, and don't forget, a lot will happen on the earnings conference call. Bob Iger is the ultimate showman, and he usually does this sandwiching of good news in between bad news and is able to give investors a new focus that Disney is working on and not unveiling necessarily, but a strategy that it's pursuing. And so I would expect to hear him say something that will get investors excited.
Yeah, I'm looking at international also down. You know, revenues there were down about 18%. Lower advertising. Romaine, forgive me. You were...
No. I mean, you can finish your thought, but I was just saying kind of what I'm looking for, too. I wonder if they're going to mention anything about Hulu specifically, and obviously the idea of getting rid of some of that stake here, because I think some people, when they're talking about right-sizing those costs, they see that as sort of an easy, sort of low-hanging fruit way for Iger to do it here. So it'll be interesting. It's not, I don't see it in the press release, but it'll be interesting to see if it comes up on the call.
No, just talking about, though, the decrease in operating income at Hulu due to higher programming and production costs. I mean, remember, and lower ad revenue. But remember, Hulu was at a time when all of these folks did not have their individual streaming services. So at this point, you have to question what is, you know, the value in still having Hulu around. Forgive me for saying, but you have to
No, I think everyone has that question. I mean, it's sort of, at least the initial concept is kind of a little bit outdated. So it'll be interesting to see whether they move away from that. Also, I'm interested in hearing, Scarlet, too, about what they're going to do with ESPN, because, of course, investors want to see that separated.
Always.
But Iger's made it clear, at least he made it clear last quarter, that's not on the table.
Yeah, absolutely. All right, let's talk about Robinhood, because it also came out with some numbers, and the stock is moving higher in after hours, trading by more than 6.5% right now. And this is after its first quarter revenue beat analyst estimates. Net revenue, $441 million. Analysts were looking for just under $423 million. For the bottom line, though, it still is a loss of $511 million. But transaction-based revenue coming in slightly better than expected. Net interest revenue also higher than anticipated, $208 million versus $191.1. And let's see, crypto revenue, which is, you know, not a big part of the business, but it was $38 million. Revenue? Apparently they do.
Okay.
It was down 1%, though.
Yeah, there you go. And that is slightly lower than what analysts had been anticipating as well.
Against comps of, remember, this quarter last year, crypto was still extremely hot. I want to point out Beyond Meat is a big mover. It's one of the biggest movers in the after hours trade on the upside, up 14% after coming out with revenue that was better than expected. And Sonos, the speaker maker, one of the biggest losers in the after hour, down about 10% right now. Sonos coming out with revenue that was in line, but adjusted EPS 4 cents a share. That beat the estimate. So for some reason, even though it beats, Sonos is a loser after hours.
Yeah, interesting. And I'm just looking at Sonos down 11%. You've got Disney trading still a little bit lower, down about 2% in the aftermarket. All right, guys, that is a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We'll see you again, same time, same place tomorrow.